Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. Today's video is going to be going over how to understand higher probability inverse fair value gaps and understand when to use them, because you can use inverses very well to gauge price and understand where price is going and understand when to take a trade, right? So we're going to be going over inverses today. They are a great tool to have. So let's get into it, right? So let's say that we have this kind of price action, right? Let's say that we have this, okay? So let's say that we're bullish on the day and we want to see, I don't know, previous day high, which is up here, right? So we want to see this buy side level, which is up here, and this is, let's say, just the 5-minute chart. I don't know, we're just free balling out here, right? So let's say that this is a new hourly candle right here, and we come down and we form an SMT here, right? So we form a bullish SMT here, and let's say that we have a fair value gap that ran through this low and formed an SMT. This right here is going to be a high probability fair value gap, inverse fair value gap, right? And usually it will be overlapped with a regular fair value gap, which can just be called a BPR, right? But right here on this leg higher, this here is going to be your highest probability and your best risk to reward. Let's say you long here and stop can be right underneath this low. Why can it be underneath this low? Because this is the SMT's low, so price should not invalidate that low, right? Now, what is not a high probability inverse fair value gap? Well, let's say that we have a range right here. Boom, right there. Let's say that this leg right here had a fair value gap in it. Why would this not be high probability? There's no highs taken. There's no higher time frame level. This is just a regular old fair value gap. So this is the kind that you do not want to be trying to long, right? So let's go look at the charts and show you guys an example that happened today. This is what gave me the idea of using this as a video. So right here we can see what a higher time frame key level, fair value gap, 15-minute key level to 15-minute external range liquidity. So if we go down here, what do we see here, right? Displacement lower through this low right here into a higher time frame key level. So what? Right here, this turns inverse. We come down, we tap it, and we go, right? So this right here, once it gets inverse, it's higher probability. Now, if you want to see a high probability fair inverse, we form an SMT right here. So this is now our internal SMT. 30-second inverse fair value gap right here, right? This is your highest probability inverse fair value gap right here. We close above it and then we rage on to the highs. Why is this the highest probability? Because we have an internal SMT, higher time frame key level down here, internal SMT, displacement out, inverses this, we go to the highs, right? So let's say that you long the close, your stop's right here. 10 points, a 2R right there. Boom. Easy enough, right? So let's see if we made a 5-minute, right? Why is this not high probability, right? If we inverse this, why is it not high probability? Because we never took any highs. That is not high probability, right? Right here. This is not a big enough fair value gap to turn inverse and then continue lower. All right, so this is not high probability and neither is this. Right? Okay, so we were bullish on the day, right? Here's another example that happened today. 5-minute fair value gap. 1-minute inverse. High probability, right? Never retakes this low and continues to absolutely rip face, right? Another one takes an internal low, turns an inverse fair value gap. Now, yeah, I probably wouldn't take this just because we don't have a higher time frame key level, but you guys see, if we take an internal low or an internal high and then inverse the fair value gap, it should continue on, right? So let's go to another day and see what else we can find, right? So right here, let's see if we can find one on this day. We have an old low, or we have sell side resting here. So we have sell side, right? Sell side, what happens? Inverse fair value gap, right? Right there. So we come down, we take this this sell side level right here, right? A 15-minute low. 930 has just opened up right here. What's it do? Judas swing into that 15-minute low, displacement higher, closes above this fair value gap, turning it inverse, absolutely rips, right? Right there. Easy enough, right? So let's see, was there a 1 minute intern? No, never mind. Okay, so let's go to another day, right? We can literally just keep doing this. All right, so I don't really like that one. But let's see right here, right? No, because this is obviously a bearish day. So let's go to one right here, right? What's this? 930 swings higher. We have an obvious draw on liquidity. What? This new week opening gap, right? Yeah, new week opening gap takes this high right here. 1 minute. Right here. Inverse fair value gap. Why is this higher probability? Why? We come up, we take this high up here, displace back inside of the range, inverse this fair value gap, taps into it, continues lower. These are higher probability inverse fair value gaps, right? Now, notice what happens throughout here. Okay? All right. What do? Create equal lows. Obviously, we are bearish on the day. Why? We have already taken this high, displaced inside the range. We have lows all throughout here. Do we continue lower? Looks like we should. Yeah, so we do. Okay, now what do we wait for? Well, we wait for a higher time frame key level. Do we have one on the 30-minute? Yes, 30-minute fair value gap, right? So we have this 30-minute fair value gap. We wait for price to tap a key level. Is it a 1 hour? 1 hour order block, right? So we wait for price to tap inside of there. And what do we see here? A fair value gap. Closes underneath it. Why is this higher probability? Because it has a higher time frame key level. Now I wonder if we form an SMT there as well. Right here. Yeah, we have an SMT right here. SMT with these highs, 30-minute fair value gap, 1 minute 1 minute inverse right here. Boom. Delivers to these equal lows, right? Failure swings all throughout here. If we run one of them, we're going to run all of them. Comes down and takes this low, right? Now, why is this? Okay, here we go. Why is this not a good inverse fair value gap to go long? Because we have all these lows throughout here. We have flipped order flow from going bullish into a higher time frame key level. Right here, it flips bearish and continues lower. This is not going to hold, right? But what happens whenever we inverse this bullish one? Taps it, continues. Higher time frame key level up here, displacement in. Wait for bullish PD raise to be disrespected. Right here, delivers lower, right? This is super simple to understand. Do we have an SMT there? Yeah, SMT right there. All right. SMT at this low. Oh, man. SMT at that low. What happens here? Inverse fair value gaps, right? Right here. Inverse these two. Kind of good momentum. Comes in, displaces out of here, right? And then another one right there. Closes above, turns this to an order block, taps the order block, continues higher, right? Huh. Now, what happened right there to go lower? Right here, 5-minute fair value gap, 1 minute inverse fair value gap. High probability. Why? Higher time frame key level, 5-minute fair value gap, into a 1 minute inverse fair value gap. High probability, right? So we this could literally just keep going on, right? But you guys see how simple this is, right? All you need is a higher time frame key level. Like, we could go literally anywhere. Right here. Do we have an SMT with Friday's low? Well, we could actually do right here, right? Because it looks like you would have gotten close to getting stopped out right here. 15-minute fair value gap can even be narrowed down to this little 1 minute, right? 15-minute fair value gap. I know I just made it smaller for the 1 minute. To what? 1 minute inverse fair value gap. Never disrespects this high. Now, the only thing that isn't nice about this one is there's no turtle soup, right? So we could have actually came up here, but once a bullish fair value gap gets disrespected again, like right here, once it gets disrespected again, then you know order flow has flipped and we should continue in that direction. So down to this low. Now, right here, what do we see? Well, we have a 3 drives pattern. 1, 2, 3. What happens? 1 minute fair value gap gets inversed. We continue higher to take out these highs, right? Equal highs 1, 2, 3, 4. Equal highs right there. Comes up. And then we take that, right? Now I wonder if that's a higher time frame key level. 15-minute fair value gap. Nope. Okay, but right here we do have one. Oh, okay. Yeah, you wouldn't want to take shorts after Friday's low has been taken. You'd want to start playing the internal range. So, do we have, right? So, tap into a 15-minute fair value gap. What happens right here? Takes an internal low. Flips this inverse right there, continues to rip higher, right? So this is how simple it is to use these inverse fair value gaps. It's just understanding which ones are high probability versus which ones are lower probability. If we're delivering from a higher time frame key level, like right here, and then we flip a bearish fair value gap into an inverse, should hold us to continue higher and take the draw on liquidity. Now, if we're bearish, higher time frame key level, that 5 minute or something up here, flips something bearish right here, a bullish fair value gap, we should continue lower, right? So it's all just understanding, are we delivering from a higher time frame key level? If we are and we flip inverse, we should continue, and that should be higher probability, right? Now, if you're not sure, you wait, right? So if we're not sure about this one, we wait for a bearish fair value gap to get inverse, right? We have all these fair value gaps right here, right? All of these are bearish or bullish fair value gaps. Wait for a single one, right? Right here. Flips inverse, we continue lower. So understand when and where we are delivering from, and then understand, should this be a high probability to deliver us further in that direction? That's it. So hope you guys enjoyed the video. Join the free Discord down below, and I'll see you in another one. Peace.